Picture this. You're at a family dinner, and your uncle leans over and says, "You know, renting is just throwing money away, right?" And you smile, nod, and quietly feel that familiar pit in your stomach. Because you've heard this 100 times. From family, from social media, from that one coworker who just bought a house and won't stop talking about it. And you start wondering, am I falling behind? Am I making a mistake every single month I keep paying rent instead of a mortgage? Look, if that's you, if you've ever felt guilty for renting like it's some kind of financial failure, this video is for you. Because we're going to break down the actual math, not the guilt, not the family opinions, not the Instagram real estate gurus, the real numbers behind renting versus buying. My name is Tahira. If you're someone who's ever felt behind because you rent, make sure to hit the subscribe button and give this video a thumbs up. Let's start with the uncomfortable truth. Renting is throwing money away is one of the most repeated pieces of financial advice, and it's also one of the least accurate. Here's why. When you pay rent, yes, that money is gone. But when you buy a home, a huge chunk of your money is gone too. It's just hidden in places most people never calculate. Let's look at the real cost of owning. Say you buy a $350,000 home with a 10% down payment. That's $35,000 up front. Then there's the mortgage. At today's rates, a big portion of your early payments goes toward interest, not equity. On top of that, you've got property tax, often 1% of the home's value per year. That's $3,500 annually. Homeowners insurance, usually $1,500 to $2,000 a year. And maintenance, the number almost nobody budgets for, typically 1 to 2% of the home's value every year. That's another $3,500 to $7,000 annually, just keeping the place from falling apart. Add that up, and owning that home could easily cost you $2,500 to $3,000 a month once you include everything, not just the mortgage payment people usually quote. Now let's look at renting. Say the equivalent home rents for $1,800 a month. That's it. No maintenance calls, no property tax bill, no surprise roof repair. Simple, predictable, done. Here's what most people don't realize. The real comparison isn't rent versus mortgage. It's rent versus the total cost of ownership, and then what happens to the money you didn't spend. This is where opportunity cost comes in, and it's the single biggest thing most people forget. That $35,000 down payment, if you didn't spend it on a house, could be invested. Historically, the stock market has returned around 8 to 10% annually over long periods. If that $35,000 sat in an index fund instead of a down payment, after 10 years at 8%, it could grow to roughly $75,000. That's not a small detail. That's tens of thousands of dollars in opportunity cost that almost never gets factored into the renting is a waste argument. So how do you actually decide? Let's walk through the framework. Step 1. How long will you stay? Buying only starts making financial sense if you stay long enough to cover closing costs, which typically run 2 to 5% of the home's price, and to build enough equity to offset those upfront costs. If you might move in 3 years, renting is almost always the smarter math. Step 2. Calculate your price to rent ratio. Take the home price and divide it by annual rent. Below 15, buying tends to make more sense. Above 20, renting often wins financially. This one ratio tells you more than most opinions you'll hear at a dinner table. Step 3. Factor in the opportunity cost of your down payment. Don't just ask, "Can I afford the down payment?" Ask, "What would this money do if I invested it instead?" Step 4. Separate the emotional decision from the financial one. Buying a home can absolutely be the right choice for stability, for a place that feels like yours, for reasons that have nothing to do with spreadsheets. Just don't let those emotional reasons disguise themselves as financial ones. Let me tell you about two people. We'll call them Sam and Ryan. Same income, same city, same starting point. Sam buys a home with a $35,000 down payment. Ryan rents a similar place for $1,800 a month and invests the $35,000 plus the monthly difference between renting and the true cost of owning. 10 years later, Sam has built meaningful equity in the home. No argument there. But Ryan's investment account, boosted by that early $35,000 and years of consistent investing, has grown to a number that, in many scenarios, rivals or even exceeds Sam's home equity, especially once you subtract what Sam spent on maintenance, interest, and taxes along the way. Neither of them made a bad decision. They just played different games with the same starting money. Now you might be thinking, but rent keeps going up every year. True, but mortgages aren't as fixed as people assume either. Property taxes rise. Insurance premiums climb, sometimes sharply. Maintenance costs increase with inflation just like everything else. Nobody's payment stays perfectly flat. You might also be thinking, but renting means I'm not building equity. Also true, but equity isn't the same as liquid wealth, and it's not the only way to build a financial future. Investing the difference builds wealth too. It's just wealth you can see in an account instead of a house. So let's recap the framework. First, know how long you'll actually stay before assuming buying is smarter. Second, run the price to rent ratio for your specific market. Third, always factor in the opportunity cost of your down payment, not just the down payment itself. Fourth, keep the emotional decision and the financial decision separate, and be honest with yourself about which one you're actually making. Because here's the truth most people don't want to hear. Renting isn't losing, and buying isn't automatically winning. They're just two different financial strategies, and the right one depends on your timeline, your market, and what you do with the money either way. The real mistake isn't renting or buying. It's making either decision without doing the math.
If this video helped you see renting and buying a little differently, make sure to hit subscribe. And I'm curious, are you currently renting, buying, or still trying to decide? Let me know in the comments because that decision is going to shape a lot more than just where you sleep tonight.